In this month's Economic Update, Kaplan Professionals' Michael Pollock speaks to an industry economist about the short-term domestic and global economic outlook.
Welcome to Kaplan Professional Education's monthly Economic Update. I'm Michael Pollock, and today we're speaking to the University of New South Wales airport economist, Tim Harcourt. Thanks for joining us, Tim.
Good to be with you, Michael.
So, Tim, what is behind RBA Governor Glenn Stevens' comment that appetite for risk has diminished somewhat in Australia?
I think there's a view in the Reserve Bank with respect to risk that Australians put all their investment into blue chips and red bricks. It's either, BHP Woodside big shares or it's property. And there is a view we don't have enough of an entrepreneurial spirit in Australia. I think that's what he's getting at. He's often got at that before. He's a part-time pilot, and he often talks about the appetite for risk in Australia. And I think the fact is we get really good returns in two existing areas, so we don't have to be as entrepreneurial as other countries.
So why are non-mining sectors of the economy struggling to pick up the slack from the decline in mining investment?
Well, the view always was that Australia could go from the mining boom to the dining boom in terms of agriculture, and we have been doing reasonably well in terms of agricultural exports in Asia. But we've also been looking at the professional services sector. That doesn't have the very high commodity prices that mining has, and it doesn't have the same capital investments that mining has. So I think we're struggling a bit. As our terms of trade falls, our price of exports over the price of imports, as that falls, and as capital investment slows down, I think the transition's actually been quite difficult for Australia. But, the labour market's still in relatively good shape.
With the Chinese economy coming off the boil to some extent, what opportunities does the ASEAN region represent for Australian businesses?
Well, I think the three engines of growth in Asia are really China, India and ASEAN. And ASEAN together is a $3 trillion economy, 622 million consumers. So it really is a third engine of growth for Australia. It's pretty diverse. So, larger economies like Indonesia, very advanced economies like Singapore, Malaysia tend to lead the charge. But there's a lot of developing economies. Cambodia, Laos, Vietnam, Burma, Myanmar are now actually very good emerging economies, particularly for oil and gas, particularly for the infrastructure sector. So I expect ASEAN will probably come more into the fore as a player in the region as China slows down and as India puts a lot of its investment in Japan and other economies in the region.
So turning to the US, what will it take to see some stability in the US dollar?
Well, it's interesting with the US dollar, isn't it? Because it's always seen as a reserve currency for everyone, despite what aspirations Beijing might have for the renminbi. So I think to some extent we'll see that continue, the US economy, the US currency as a safe haven. I think to some extent the commodity currencies, Australia, Canada, Brazil, are subject to some extent to the slowdown in China. So I think that will again probably have a slight bias towards the US dollar strengthening, particularly with the fact that Janet Yellen at the Fed put rates up last year.
Should the Fed provide more forward guidance on its monetary policy plans in order to increase economic stability?
Look, I think Janet Yellen made it pretty clear that she wasn't going to say when she was going to put the brake on, but she was telling people pretty clearly, herself and the other Fed governors, that she was taking the foot off the accelerator. So a lot of the Fed actions have been pretty much factored in to the markets, and that was reasonably well transmitted, I think, by a number of the Fed governors, including those that spoke in Australia. I think to some extent they're watching very carefully because of the presidential election this year, Congress and the Senate. And so whilst they've had pretty good labour market growth, Janet Yellen's a former labour market economist, they're still keeping their powder dry, I think, to find out who wins the White House and how China performs this year.
So let's look at China. What risks do increased capital outflows and the subsequent depletion of FX reserves pose for the Chinese economy?
Well, when we look at China, I think we look at this great transition. It used to be a nation of shoppers, nation of shippers, and it wants to be a nation of shoppers. It was very export dependent, hence all the shipping. Now it wants to boost its consumption and investment locally. And I think the lesson of the Asian financial crisis in '97 was that China wanted to have a buffer of reserves, so it wasn't attacked like the Thai baht or the Malaysian ringgit was. Now I think they're loosening up and they see their future partly having large degrees of outward investment. And I think that's the reason they've taken a slightly different view on their reserves than they did when they're a little bit trigger shy after the Asian financial crisis of 97, 99.
To what extent do you think Premier Li Keqiang's promise to deal with zombie enterprises, the large state-owned loss-making companies, will unnerve investors?
I think, the zombienomics or the zombie enterprises, I think they've known about this for a long time, particularly with a lot of the shadow banking and a lot of the large debt levels that the enterprises have had. I think ultimately they're going to have to loosen the grip of the state-owned enterprises and grow the SME sector, because it's actually quite a vibrant sector in China. So I think as is everything done, as everything is done in China in terms of economic policy, you take people step by step in what you're going to do, and you do it. So I'd imagine that the Premier would be making his intentions very clear that he's going to restructure those enterprises, and it's probably better that those intentions are made clear through the party and through the party conference statements than to pull any surprises. I think China lost a lot of confidence when the share markets were tanking at the beginning of the year, so they want to be seen to foreign investors as being pretty much in control of the transition that they're undertaking.
Just looking at Europe, what would be the major ramifications should Britain actually exit the European Union?
It's interesting with the Brexit. We went through last year, the year before, the my big fat Greek debt and the implications of Greece. Britain's quite a different case. In many cases, they haven't really been a happy member of the club, the European club. The French actually vetoed them when they originally tried to join. And I think to some extent Europe is seen as a noble idea to make sure France and Germany don't go to war again and to reduce tariffs, but it got too big. A currency, a bank, a central bank, a foreign policy for all 29 nations. It just got too big, too cumbersome. So the Brits probably feel it is a place where there's a lot of trade distortions. It's a place that probably holds them back in terms of the business that they do in Asia and in the rest of the world. And to some extent, being a good neighbour and being a good trading partner of Europe is better than being a member of the European club inside the tent. Certainly better than being a member of the common currency, and they're probably very thankful they didn't join the euro when it was proposed by Tony Blair. So I think for the most part there are a reasonable economic case to be outside Europe. On the other hand, if you think about it from a global point of view, Vladimir Putin would like Britain to leave the EU. He'd like the US to be weaker. In some cases, if you look at the instability in the world, particularly with what's going on in Syria, geopolitically, you'd want Britain to stay in Europe, and that's probably the strongest case, probably more so than any economic case for staying in Europe. So it'll be a pretty fiery referendum, I suspect.
Just looking at Brazil, what impacts do you expect the slump in the economy to a 25-year low to have both in that country and on the global economy?
Yeah, well, 3 years ago, Brazil had overtaken the UK as the fifth largest economy in the world. We wrote a book, Great Southern Lands, about Australia and Brazil being the new economies of the future. Since then, Brazil has been affected, like Australia, with falling commodity prices, but it's had a lot of internal scandals with its own institutions. So I think Brazil will go through a pretty hard period, notwithstanding the Olympic Games. And really, when you look at Latin America, it's really now Chile and Peru and Colombia, the Pacific Alliance nations that we now look at, and Brazil will have to make that adjustment for the great changes in commodity prices, but also its own institutional arrangements that's led to a lot of their political economy problems. So pretty tough days for Brazil ahead, and we'd probably wish that Brazil was a bit stronger in terms of a global economic player.
Much has been made of the collapse of world oil prices. In your view, has it been due to oversupply, such as from Iran coming online, or falling demand?
Well, I think it's partly falling demand, notwithstanding the changes in Iran. I think for the most part, a lot of our trading partners are very oil dependent. They're net importers of oil. So, when you think about Japan and Korea, China and so on, this is actually going to be good for them, and therefore good for Australia, because we export to those countries. So I would say, probably a falling oil prices, probably good news for our trading partners and therefore Australia, and good news for Qantas, as we've seen in their own turnaround. So probably a bit of relief for those countries, and probably going to be a little bit tough for Saudi Arabia, Venezuela, and some of the very oil-dependent exporters going forward.
Thanks very much for your time today, Tim.
It's a good set of questions. Thank you.